Did you know that someone once spent 10,000 bitcoins to buy 2 pizzas? Those same bitcoins would be worth over $600 million today. Shocking, right? But here's what's even more interesting. While some people became millionaires from Bitcoin, others lost their life savings trying to do the same thing. What's the difference between these two groups? The answer isn't luck, it's understanding. Let's uncover the secrets of Bitcoin price analysis that the experts don't want you to know. First, let's get something straight. Bitcoin isn't just internet money. It's a revolution happening right under our noses. Imagine a type of money that no government controls, no bank can freeze, and no one can counterfeit. That's Bitcoin, digital gold that lives on thousands of computers worldwide. But here's the million-dollar question. How do you figure out if Bitcoin is worth buying or selling? The good news? It's not as complicated as the experts make it sound. Here's what really moves Bitcoin's price: supply and demand. Unlike regular money that governments can print endlessly, only 21 million Bitcoins will ever exist. When more people want to buy than sell, the price goes up. Simple as that. Market sentiment. Bitcoin prices often react to news. Did a big company just buy Bitcoin? Price might go up. Did a country ban it? Price might drop. Here's how you can analyze Bitcoin prices like a pro. For technical analysis, which means looking at charts, you'll want to watch the moving averages, the 50-day and 200-day. When the short-term average crosses above the long-term, it might signal an uptrend. You should also look for support levels, which are prices where Bitcoin typically stops falling, and resistance levels, where it usually stops rising. Don't forget to pay attention to trading volume. High volume usually confirms price trends. For fundamental analysis, which means looking at the big picture, you'll want to monitor institutional adoption. Are big companies buying? You should track regulatory news from major countries, follow Bitcoin's mining activity and network health, and watch broader economic trends like inflation rates. Now let me share some warning signs you can't ignore. Watch out for sudden price spikes without clear reasons. Be careful when too many people are talking about getting rich quick. And never trust promises of guaranteed returns. Nothing is guaranteed in crypto. Here's the insider's playbook for beginners. Never invest more than you can afford to lose. Use dollar cost averaging. Buy small amounts regularly instead of all at once. Keep track of your country's crypto tax laws. Store your Bitcoin securely in a reliable wallet. And don't make decisions based on FOMO. That's the FEAROFMISSINGOUT. Here's the truth. Bitcoin's price can change dramatically in minutes. What makes it challenging is that it trades 24/7, unlike stock markets. But with these analysis tools in your arsenal, you're already ahead of 90% of crypto investors. Remember, the goal isn't to predict the exact price. It's to make informed decisions based on multiple factors. Start small, learn continuously, and always do your own research. Don't be the person who misses out on the next big move because they didn't understand how to analyze Bitcoin properly.